If you're 65 or older, there's a real chance you're handing money to the IRS or even filing a return that you are not legally required to. Not because you did anything wrong, but because the rules quietly change once you hit 65, and nobody sends you a letter explaining them. Every year, millions of seniors either overpay their taxes or file return they never had to file, simply because they don't know where the lines are drawn. So in the next 10 minutes, I'm going to walk you through the taxes you may legally be off the hook for. Some of you watching may not need to file at all. Your Social Security may be completely tax-free. And there's one federal credit worth thousands of dollars that almost no one claims, because they've never even heard of it. I'll show you each one, and exactly how to check whether it applies to you. No guesswork, just the rules. In plain English. Before we start, if you'd rather keep your money than overpay the IRS, subscribe and turn on the bell. This is the practical stuff that puts real dollars back in your pocket. All right, let's start with the biggest one. Here's a fact that surprises a lot of seniors. You might not be required to file a federal tax return at all. The IRS sets an income threshold, and if your income is below it, filing is optional. And here's the key, that threshold is higher once you turn 65. For the 2025 tax year, single filer 65 or older generally doesn't have to file until gross income reaches around $17,750. For a married couple where both are 65 or older, that number is about $34,700. But here's the part that changes everything. So listen closely. For this test, your Social Security benefits usually don't count as gross income. So if Social Security is your only source of income, even if it's $20,000, $30,000, or $40,000 a year, your countable income for this threshold can be zero. And you often don't have to file a federal return at all. Now, don't confuse not required to file with never should. Sometimes filing gets you a refund even when you don't have to. We'll come back to that. But first, let's talk about the tax that worries seniors most. The tax on Social Security itself. A lot of seniors assume their Social Security is automatically taxed. For many of you, it isn't, not $1 of it. Here's how it actually works. The IRS looks at what's called your combined income. Half of your Social Security, plus your other income, plus any tax-exempt interest. If that number stays at or below $25,000 for a single filer, or $32,000 for a couple, then 0% of your Social Security is taxed at the federal level. Above those lines, a portion becomes taxable, but below them, it's tax-free. And let me kill a myth right here, because it costs people money. You may have heard that Social Security becomes tax-free after 70 or at some magic age. That is not true. There is no age at which Social Security automatically stops being taxable. It's based entirely on your income, not your age. Now, that's the federal picture. The state picture is often even better. 8 states have no state income tax at all: Alaska, Florida, Nevada, South Dakota, Tennessee, Texas, Washington, and Wyoming. So your Social Security, your 401k, and your IRA withdrawals are all free of state tax there. And the large majority of states don't tax Social Security benefits, even if they do have an income tax. So check your state. You may be paying state tax on retirement income you don't owe. Next, let's talk about the deductions that can erase your bill entirely. Even if you do have to file, a stack of senior tax breaks can shrink or completely eliminate what you owe. First, once you turn 65, you automatically get a higher standard deduction than younger taxpayers. there's an extra amount added on just for your age. On top of that, the new senior bonus deduction, worth up to $6,000 per person. $12,000 for a couple, stacks right on top for tax years 2025 through 2028. Put those together and the numbers get powerful. A single senior can shield well over $20,000 of income from tax before owing a dime. A couple, over $40,000. For a lot of retirees living on a modest fixed income. That combination means their taxable income drops to zero and they owe nothing at all. So if you've been assuming you owe federal tax, run the math with these senior deductions applied. You may find the number is far lower than you thought, or gone entirely. And speaking of things people don't know exist, this next one is a credit almost nobody claims. Here's one of the best kept secrets in the tax code: the credit for the elderly or the disabled. This is a federal tax credit specifically for people 65 and older, and for those who retired on permanent disability. And remember, a credit is even better than a deduction, because it reduces your actual tax bill dollar for dollar, not just your taxable income. Depending on your situation, it can be worth up to several $1,000s. So why does almost nobody claim it? Because it's tucked away on a separate form, Schedule R, and no one tells you it's there. It's aimed at lower income seniors. So there are income limits, and not everyone will qualify. But the seniors who do qualify and miss it are leaving real money on the table every single year. If your income is modest and you're 65 or older, ask your tax preparer specifically about the credit for the elderly or disabled. Or look up Schedule R. 2 minutes of asking could be worth thousands. Now let me show you tax you can actively avoid if you have retirement accounts. If you have a traditional IRA and you're in your 70s, the government eventually forces you to take money out every year, a required minimum distribution, and that withdrawal normally counts as taxable income. But here's a move most people don't know about. If you're 70 and a half or older and you give to charity, you can send money directly from your IRA to a charity through what's called a qualified charitable distribution. That transfer counts toward your required withdrawal, but it does not count as taxable income to you. So instead of taking the money, paying tax on it, and then donating, you skip the tax entirely. For charitably minded seniors, that's a powerful way to satisfy a required withdrawal without the tax bill. And one more, if you have significant health costs, if you itemize, you can deduct unreimbursed medical and dental expenses, including things like long-term care and prescriptions, to the extent they go above 7.5% of your income. Given how much healthcare costs in retirement, that deduction adds up faster than many seniors realize. Finally, let's make sure you're not overpaying just to file and not leaving money behind. 2 last things that quietly cost seniors money. First, don't pay for tax preparation you can get for free. There are free programs built specifically for older Americans. The ARP Tax Aid Program and the IRS VITA program offer free in-person help. An IRS free file is available online if your income is under about $84,000. If you've been paying a preparer a few $100s for a simple return, that's money you may not need to spend. Second, and this is the flip side of everything we've covered, sometimes you should file even when you're not required to, because you might be owed a refund from taxes withheld during the year, or a credit you qualify for. And if you already filed a past return and now realize you overpaid, you missed the senior deductions, or paid tax on Social Security you didn't owe, you can file an amended return and get that money back. Overpaying is not permanent. You can fix. So here's your checklist. 1. Check whether you even have to file. The threshold is higher at 65. And Social Security usually doesn't count toward it. 2. Your Social Security may be 0% taxable federally. And most states don't tax it, there's no magic age. It's about income. 3. The senior standard deduction plus the new $6,000 deduction can wipe out your bill. 4. Ask about the credit for the elderly or disabled on Schedule R. And 5. Use a qualified charitable distribution to avoid tax on required withdrawals. Get free filing help. And amend past returns if you overpaid. The single most valuable thing you can do today. Before you pay another dollar, sit down with a tax preparer or a free ARP tax aid volunteer and ask one question. Given my age and income, what do I actually owe? And what am I not required to pay because tax rules depend on your specific situation? That conversation could be worth hundreds or thousands.